students, this may be a bit of a repeat for you. I'm not sure, but what we've talked a little bit about Dr. Poole's background, and Dr. Poole is the associate superintendent and the OPS school district, and he has been with OPS quite a while as they're in charge of finance. And previous to that, he served as the Department of Education finance director. So he has a very strong background, not only in finance in an urban school, but he also understands what schools across the state need. So this may or may not be a repeat, but I'm going to turn it over to Dennis and let him talk to you a little bit about the PowerPoint that he's prepared for this class.
Thanks, Dr. Nelson. And if this is a part of it, our technology, we're working on it. It's getting better. It's getting better all the time. So anyway, this has been a PowerPoint that we've used several times in presenting to students and boards of education about the basics of school finance. And obviously, as we go through this, if there's things that come up after we do this presentation that you have questions about, I'm sure that Dr. Nelson would be glad to field those questions, and if I can help respond to them, I will do so as well. But the basis of this presentation is the financial planning and the budget and overview, a little bit of the finance process. You notice at the bottom of this, I have down there Nebraska's shoebox accounting structure, a cash accounting and budgeting system. Nebraska is one of the very few states that still continues to use cash basis funding, or at least a version of it. And if you've ever been a member of a club or an organization and you were ever the treasurer of that club, it's all very cash oriented. You bring your revenue, your cash in, you log it in a ledger, you keep track of it, and when you spend money, you either write a check or you take money out of the shoebox and you pay for it and you write it down, and all those things tie together. And while it may seem pretty basic fundamental, we've created a very complex system that goes around that. So my presentation today is kind of to give you a little bit of an overview of that, and also to talk a little bit about the state funding system that we have in Nebraska. But the first thing out is that public school district timeline. In fact, we have a bill that was introduced now in the 2015 legislature that actually changes the fiscal year back to the end of August and beginning of August instead of September, which could be an interesting thing. But schools no longer simply operate at a September 1. We used to start school after September, after Labor Day, and move from there. Now we have a whole different environment, so it doesn't really match up real well. And so that's the concern that I have, is that as a finance administrator, it's tough to finance and operate schools, develop a budget that doesn't necessarily match up with the state's current fiscal year. But also the point of it I like to make is that, I've always felt that anybody can develop a budget. Budget development is a plan. We also know that looking at that plan is it has to be a balanced budget, all those things. But there are issues with managing a budget, and there are some significant fiscal ramifications that go along with bad management of your budget. And so it's a very high concern for school administrators, and it should be. And so that's a big piece of it. And then also you have these annual finance reports that are required, and our budgets and our financial processes are audited by a third-party auditor. And that means that it's public. It's, as in the current terminology, it's very transparent. And so I just encourage you to think about those things as you move through your career as a superintendent or a finance administrator. One of the things that we have to make sure is we understand the terms of all of this. And the Department of Education, by promulgated rule, defines the accounting and the budgeting processes for our schools. Rules 1 and Rule 2, and you can certainly look at what goes on in the schools and what they have by the department rules. And one of the key things is that this is the fund basis. It's a sum of money derived for a specific purpose, and it has uses that are restricted by these rules. And the first parsing of these funds is that we have property tax levying funds, and then we have non-levying funds. And I'm going to spend a few minutes just to go through that. The Nebraska Public Schools property tax levying funds. We have the general fund, which is basically our operations for our school districts, teachers, principals, administration, supplies, equipment for maintenance, those kinds of things. Then we have a special building fund, which is a sinking fund or sinking funds for construction renovation. And again, those are pretty restricted by the Department of Education. The bond fund, a lot of people believe that the bond fund is what you construct buildings out of, and no, it's not. It's the debt service. It's the principal and the interest that we have to pay back to our bond holders for the bonds that we've issued for the construction that happens out of the special building fund. And then there's the Qualified Capital Purpose Undertaking Fund, long name. People call it the QC-PUF, hazardous materials, abatement of handicapped accessibility, projects, correction of life safety codes. Those are the kinds of things that go into the Qualified Capital Purpose Fund. Then we have non-levying funds, or shoeboxes, and that is the lunch fund, nutrition services program. You have a depreciation fund. You may or may not have those funds. I mean, these are built district by district types of funds. Employee benefit funds. This is where you simply put your payments for your state and federal taxes that are paid to your employees, and then at a later date, the quarterly, we pay those back out to the federal government. It's just a holding fund, but you have to report it because, again, it's a shoebox that you put money in, and it's a shoebox that you take money out of. Student fee fund, which was put into place, which says if you're going to collect fees for non-curricular activities, they have to be deposited in the fund, and they have to be paid out for the purposes of which they were collected. Activity funds, and most of us understand activity funds if you were involved in any type of activities, fundraisers, student performances, athletics, all those funds go into the activity fund. Cooperative fund, this is an in and out fund. Many districts use it, many don't. In the Omaha Public School District, we use it significantly because it's a fund where we work our Interlocal Cooperation Act agreements through. For example, our busing program that we run in joint with the Millard Public Schools. Millard pays us, we deposit the money into the cooperative fund, and then we pay our bus contractor out of the cooperative fund. So those are all things that are kind of flow through, or however you want to look at those, but those are the non-levying funds.
Dennis?
Yeah.
In looking at the non-levying, I mean, the lunch fund, activity fund, most of that comes from the general fund, though, right? I mean,
these are simply subcategories that are included. The Nebraska budgeting process requires that schools report funds within their budget documents in a way that shows up as a total of all of your, again, shoebox accounting, all of your receipts. All of your receipts come into the shoebox. All of your expenditures go out of the shoebox. Now, you certainly have some funds like the bond fund, the special building fund. These are subsidiary funds typically that are reported in the general fund, and which tend to, on state budgeting documents, would inflate the cost of your budget because these things are reported in addition to the operations, but they are also required to be reported. And so, for instance, I will just use as a quick example, the Omaha Public Schools might have a $500 million operations general fund budget, but what's reported to the state with all of these subsidiary accounts would be closer to $800 million. So they're reported, and they're just simply a part of the process that's reported in the shoebox.
Okay.
Thank you for that. And again, here's the shoeboxes. within the shoebox, within the fund, the shoebox, you have, again, function, or I would call them file folders, that are part of those funds, or can be, or not. They may or may not be included, but if you have in that particular shoebox, if you have a regular instruction file folder or special education, student support, instructional support, all of these different file folders fit within that structure. And those are required by the Department of Education in Rule 2 for the reporting of school finances. And they are certainly a part of every school district in Nebraska's finance reporting structure.
Part of this class is we will do some coding projects, so they'll have looked at all those.
Yeah, that's it's important to understand because when you do report out an expenditure, one of the things that I've always stressed to my staff and to people that I've worked with is, because of the reporting processes, you want to make sure that the expenditure is linked to the event or the activity or the place that most truly reflects where that expenditure took place. For instance, if someone was to ask me what's the cost of operating one of our high schools, if you don't code all of the expenditures correctly to that high school, then is that really reflecting total expenditures in that school? And I think that's an important thing that you need to all remember, is that you want to make sure that your expenditures are coded correctly and back to your budget, to make sure that your budget and your reporting out in this age of transparency, make sure that they reflect what you have planned in your budget. As we talk about planning the budget and budget development, we have we use some terminology within our district. We always have what we call our submitted budgets, and these are the budgets that our building level principals and our departments report to the finance office. We then take all of those submitted budgets and we aggregate them up to a district level. We present those to the Board of Education for their review, their prioritization, or how they want to do that, and we call that then the proposed budget as we work through the summer. And finally, then after you have your legal hearings and all of the information and input is taken, then you have an adopted budget, which moves in then to our accounting system. The adopted budget is then what we go forward as a school district to make sure that we have the resources available to our schools. Of course, once you have an adopted budget, you have to live within the budget. Some of the things that you have that you look at, we look at what are the development parameters of our budget. And this is a real challenge in the state of Nebraska. These parameters are difficult to come up with, to say the least, because of all the changes. But what are your required services? You know you're going to have your programs that you have to provide for. You have your utilities, you have health insurance, all those things. If you're going to have a health insurance program and you have so many staff members and you know what the program is through your collective bargaining agreements, you will pay for those agreements and you will pay for the utilities. So those are required. And then you have the district priorities for your instructional services, your initiatives. And then there's those required state limitations that you have to live within. So you have to balance between what do you want to do and what do you have resources to do. So those are the things then that fall over into what a Board of Education, the superintendent, finance administrators, the potential fiscal impacts, and then do you have any contingencies? What happens when things don't work as you've planned? How do you work through the contingency process? Do you budget for a contingency? Do you just hope and pray that you'll have monies from some unexpended project that will cover those over expenditures? Or do you make other plans to do that? So those are real questions that finance people have to address every year when we develop our budget and go to our board with our budget development parameters. So when we get to the general fund, and I'm speaking now of those basically the levy state-supported funds, the state of Nebraska has in the past oh, help me, Dr. Nelson, since 1990, 98, 99, when the TIOSA Act was put in place.
Yes.
The state has put into place a budget limitation. That was the first limitation that we had, was an expenditure budget authority and limited expenditure. Now, that's been changed over the years several different ways and several different times, but as it currently stands here in 2015, it is the greater of three ways that the Department of Education calculates. It's the greater of the budget-based calculation, it's based on a student growth adjustment calculation, and it's also based on a formula needs calculation. So the Department of Education will tell you how much you can spend. Plus, in that bottom bullet, how much access do you have to your prior unused budget authority? Many of our school districts in Nebraska are faced with the fact that they have revenue, they have funds, but they don't have the spending authority or the budget authority to be able to spend those dollars. And so that in many of our rural schools who have access currently to some great agricultural valuations, which return some high dollars within the political ramifications of that, may have access to dollars they simply can't spend. So the state of Nebraska started with TIOSA. When it did that, this was the key piece of that. To control school spending was a statewide general fund expenditure limitation. So currently, general fund expenditure limitation has some exclusions. Now, these things don't necessarily align with what I just showed you in that previous slide. So there are some state approved exclusions that are included in this. Some supplementary grants on a special grant fund list, and you can apply to the state for those. Insurance settlements, interfund loans, infrastructure for damage done by natural disaster, retirement incentive plans, voluntary termination plans, retirement contribution increases. In the past few years, we've had some very significant increases in our retirement contributions, and the state has allowed us to keep those outside of our expenditure limitation, which probably a good deal. Early childhood education grants, there's several others, and you can get those from the Department of Education. And then, of course, there's the voter-approved exclusions. Now, the voters of the state of Nebraska have been authorized by the legislature to approve some exclusions to this. And if the voters of the district, just as in a bond issue, say to their constituency, hey, we want to spend more money in our school district and we're willing to accept the tax rates that go with that, the state says, well, if you vote for it, you can do that for up to 5 years, and then you have to re-vote again. So then we look at the categories that we put in our budget for revenues. We have our local resources. I've listed several of them. I don't have them all listed here, but you have your taxes, property taxes, your interest earned. Now I will share with you, and most of you know that today, interest earned is not a big revenue receipt. Now, it used to be. It used to be when we were getting 6.5% on our monies that we had in our reserves that we had invested. It was a fairly nice revenue stream. Not today. Fines and license from the county and the cities that we live in. State, of course, we have our state aid, special education, school age children. We have apportionment, and just again, apportionment is an interesting thing. It's from the old historical schools permanent fund, which was based upon the Homestead Act. Goes on as to how that was used and unfortunately misused as well for the support of schools by the Homestead Act. Federal and Elementary Secondary Education Act is the main one with Title I, Title II. The federal government in the past few years have significantly reduced the amounts of money that have for increase in those funds. And if you watch the papers, read the news, there's continued discussion around that. It's going to be reauthorized or increased or whatever. Special education in Nebraska, preschool education for special education is funded through the federal funds. And then, of course, you have some other receipts. You have sale of property. If you have if the district would sell some asset of some type, that would be included in the revenue stream. Financial gifts. that you might receive. Those are things that, frankly, I tell people we don't want your gift because, for one thing, that those financial gifts that come directly to the school district are considered other receipts and are offset by state aid. So the gift, in essence, may offset any equalization aid you have, and we'll talk about that in a few minutes. And then we have the property tax revenue limitations. These are for the property tax itself. The funds are restricted under, and currently, a levy limit of $1.05 per $100 of assessed value. That over the years has gone up, gone down, been adjusted. Right now, property tax increases in property taxes is a very it's just a bad word. So you don't want to be out there saying we need to increase property taxes because unfortunately, the senators and the state legislatures they won't like that. And of course, our governor. That's all about property tax relief. But those funds go to the general fund. They go to the special building fund. And by the way, the special building fund levy limit for that fund alone is 14 cents. Well, but the 14 cents goes under the $1.05. And so if you were to levy a full 14 cents to have a sinking fund for your special building fund, that would leave you 81 cents for the general fund operations. And most school districts today certainly can't afford to do that unless you're a very significantly underfunded district, such as some of our rural districts with state aid, with equalization aid, and have high property values. Then there's the Qualified Capital Purpose Undertaking Fund, which I mentioned earlier, has a limitation of that fund itself about 5 1/4 cents. And again, you can have some bonds issued through that, which would be outside of that limitation, but those are exclusions. And I said, here's the exclusions. The bonded indebtedness, of course, in Nebraska, voter approved or otherwise, is outside of the levy limit. And then you have a voter approved levy override, and you can the voters have to approve that. So if you vote to expend more money, you also then may have to vote to override your levy limit to accommodate that additional expending as well.
Dennis, I have a question.
Yes, sir.
Special building fund limitation at 14 cents. I didn't understand what you were saying. It used to be 14%, but I thought it was reduced to 5 or something. Is that not correct?
No, it's still a 14 cent levy fund for that special building fund.
Okay.
But the 14 cents is under the $1.05 levy limit.
There we go.
It's a matter of subtraction. If you were to do that, as I indicated, if you were to levy, let's say, 5 cents in your special building fund, then all you would have left for your general fund would be the $1.
Yeah.
And so that's still on the books, as well as the 5 1/4 cent for the special or for the Qualified Capital Purpose Undertaking Fund. But I don't know of any school district that's and in fact, the Omaha Public Schools, we've over the years, our special building fund levy is now deteriorated into zero. There is no money being funded into the special building fund, which is, again, thank goodness for the bond issue, looking over our shoulders, looking back to the era bonds that we had from the American Reinvestment and Recovery Act. We were able to use some of those funds and issue those bonds, again, outside of the levy limitation. And then back to the property tax exclusions, the bonded indebtedness that's voted in and also issued under these special funds that permit that, voter-approved override, early leaving incentive payments for staff. These are programs which have been scrutinized in recent years, are also outside of the levy limit. And then the last one there is one that was put in place years ago, which is if you had a lease purchase approval prior to 1998, that lease purchase could be outside of the levy limit. And I'm not aware of too many school districts other than maybe the Lincoln Public Schools who did a good job of anticipating this and planned a significant number of projects outside that lease with lease purchase. And so they still continue to have some of that exclusion. Then we get into the budget development process, the issues that we have with that. As a finance administrator, as a superintendent, you are going to have all kinds of issues because, and I've used in recent years, I tell the Board of Education and I tell people that my crystal ball, I should have got one out to be able to show you that my crystal ball is about as clear as an Idaho potato. It is difficult as all get out to be able to tell what these things are going to be. So first of all, what is your expenditure authority? What is it going to be? Well, the legislature has made changes in that forecasting process. They've changed the expenditure authority several times. And so to count on it staying the same, you have to wait till the legislature gets through introducing bills, and for this particular year in 2015, that was yesterday, and so the bills now are out there. We can go through and see if there are any bills to do that, but of course bills can be amended and changed, and it's very difficult to protect. What is your revenue forecast? What is your revenue? What are you going to have from state aid, the Tax Equity and Education Opportunity Support Act? People will refer to that, and we'll refer to it here as TEOSA. State aid and legislative changes, they've changed it continually over the life of that particular act, and so it's very difficult to predict what you get. And they've changed also the certification date from February to June to April to March, and so who knows what it might get changed to in this year. I think in this current, under the current statutes, I think it's March. And then, of course, property tax revenue. What is your property tax? Well, it's based on valuation. What is your valuation? Well, valuation for school districts is not certified until August 20 of a given fiscal year. And so you already have students in school in many places before you even know what your property tax revenue is going to be. Challenging, challenging, challenging. And then, of course, you've got the prioritization of the Board of Education. What is the board going to prioritize? What are the board going to prioritize as far as staff salaries and benefits? You have your academic standards, your staffing requirements, because we have student growth, those types of things. You're going to have to take those into consideration. One of the things that we faced in recent years is technology infrastructure, replacement of computers, replacement of different kinds of technology configurations in our buildings that support the instruction. Those are all very expensive items, and we need to take those in consideration. And then what else? I mean, the Board of Education, as we know, still have some opportunity to make some decisions regarding those types of expenditures. Well, let's talk a little bit about financial equity. I really would like to spend a few minutes just talking about the state aid to Nebraska. It's called the Tax Equity and Education Opportunities Support Act. It was enacted in 1999, approved by the 1998, and approved by the voters in 99, which provided for some increases in income taxes across the state to support the equity of our property tax levy. Now, I'm going to say here, I want to spend some minutes on it because there's a great deal of misunderstanding regarding this. Based on the premise, if you look in the laws and you look at the premise of this particular act, it addresses that the purpose of this is to equalize property tax rates. We had, at the time this was enacted, we had school districts with property tax rates of $2.54 down to school districts that were Class 1 elementary only school districts, which had no property tax levy. And a great disparity there. And so the purpose of this act was to bring those property tax levy into some degree of equity. So we also then have an act that says the property tax can't be too high. But then they also have a minimum local effort included in the act, which says you have to have a minimum of a local effort, which means you can't have your property taxes too low or you don't get state aid. Well, a lot of people have just simply forgotten this concept. It's not about what money comes to my district. It's what it's supposed to do, equalize to make sure these property tax levy rates are coming closer together. And that was the purpose of the act. And whether we think that or not, public educators, administrators, that was the purpose of the act. And so we're living in a time now where state aid seems to be a grant, a potential that we all should get some type of state aid. And we do. And we do. I don't know what I just did.
There you go.
Okay, and here's an example of what I was talking about. This is where we were. This is the disparity. School District A, 500 students. School District B, second large bullet down below, 500 students. The property value in one district is $100 million. Well, the available tax revenue at a $5 levy limit would be $2,100 per student. In School District B, with the same number of students, but they only have a valuation of $50 million, well, you take that same $5 levy limit, and they can only generate $1,050 per student. That is called disparity. And that was the purpose of the act, was to say, well, then we're going to give School District B more state aid than we give School District A. And we've lost that concept. We've lost sight of that concept, because that was what the act's original intent was, is to simply say, let's fix this disparity. It wasn't to say we need to give every school district an equal amount of dollars per student. So what is the basic concept? It does a calculated needs. The state of Nebraska will calculate through now a very much more complex process than it when started when Dr. Nelson and I were in the school administration days. Calculated needs were fairly simple. It's become much more complex. Doesn't mean it's not understandable. It is, and it can be done, but it is more complex. Calculated resources. How much money do you have in your school district to pay for what the state says you need to have to provide education services to your students? Calculated needs, subtract the calculated resources. As long as the calculated needs is greater than the calculated resources, you will get equalization aid. Now, the problem is state aid is not equalization aid. Many people believe that this TIOSHA formula provides them with state aid, and if they don't get equalization aid, they're not getting state aid, and that's not correct. The district allocated income tax, this was a part of the original act. Every school is returned to that school district some of the patrons of that school district's income tax revenue. That was a part of the premise of the original bill. Still in place. In fact, the current legislature is looking at, again, decreasing that amount of money that goes to schools. Also, you get net option funding for those districts who have qualified net option funding students. They have more students coming in than they have going out. They get additional state aid to support those. State aid, not equalization aid. So one must remember that when we say we don't get any state aid, we have to be careful. We may not get equalization aid, because if our calculated needs are less than what our calculated resources are, you will not get equalization aid under the current formula. I put this slide in here to illustrate what there is, because this piece has changed dramatically over the years. And you can look through that second bullet. Those are all of the adjustments to the basic funding. Now, the basic funding is what you spend on students. But we add a poverty allowance. We add a limited English proficiency allowance. You go through the list: focus school programs allowance, summer school allowance, transportation allowance, special receipts allowance. All those things are added. But then you also have at the bottom corrections. So if you have a correction, it may take needs away from your district. And so what happens is you will have to submit the state will calculate a lesser needs for you because of a correction in a prior year or in these correction allowances. So those are big, important pieces, and they are things you need to keep your eyes on because they will change your formula needs and potentially then change your opportunity to receive equalization aid. What's on the resource side? Excuse me. The primary use of the resource side is how much can a local district generate to pay for those needs that we just saw? Well, the primary one is, of course, the property tax, and that's considered the local effort rate. And the local effort rate is a pseudo property tax rate that's multiplied times an adjusted value by the Department of Property Tax in the state of Nebraska, in Lincoln, Nebraska, which you're certified by each and every class of property value you have in your district, adjusted accordingly to whether it was a fair marketed value and it meets the state guideline. That is submitted to the Department of Education. The Department of Education applies this local effort rate, which they have changed from year to year, time to time, because they've used that to adjust what local resources are held accountable and thus changing the amount of money available to school districts for their state aid, their equalization aid. The yield from local effort rate is adjusted valuation divided by 100 times the local effort rate of $1 at the current time. It's been higher, it's been lower. The local effort rate is determined by statute. It isn't anything that you can go out and change or make different. It's what the state of Nebraska says. This is what holds your property values adjusted to. Well, let's stop a second and talk about legislation. There's never an end to this. Education Committee proposals for state aid. Adequate funding versus free funding. The Constitution of the state of Nebraska says you will have a free education provided by the state. We all know that a free education is very different from an adequate education. And so efforts to identify what an adequate education have not been heard very well by our legal system. And so we are faced with the fact that the legislature will determine what these are. We have limited increases in state funding versus decreases in state funding. I will tell you that I unfortunately don't see a time when we're going to see great increases in state funding for public education. It's just the times have changed. All you have to do is look around the country. If you want to take a quick look at Kansas, you'll see what happens in some very draconian ways to school funding. So we're actually in probably better shape than many states regarding this changes in funding. Funding based on historical spending patterns. That's key. What does it cost to provide education? And we, in the state of Nebraska, by determining the needs, determine what we need for spending. Or is your expenditures, your real expenditures, more predictive of what it costs to educate children in your community? Reimbursements for special programs is also a consideration. Early childhood education. I think we're going to see significant movements to probably more increase at a higher rate some of our early childhood programming, and that we'll just have to see. Again, those costs. Charter schools, tax credits for private schools. We hear those every year. Students' assessments and failing schools. In the legislature, we talk about what we're going to do to a school if you are failing. We're going to do it to you. And that is a very onerous piece as far as I'm concerned as a public school administrator and educator. Agricultural property values. My goodness, that's going to be a big piece because, as you all know, in our rural and agricultural areas, we've had significant increases in property values, inflated because that's what people will pay. The people who own those properties or adjacent properties that are sold for hundreds and millions of dollars are assessed equal property values, and they simply don't have the revenue coming from that land to pay for those taxes that are assessed against it at that particular rate, and thus you have a great agricultural urban split there. We have your urban rural splits. Those things are going to be topics that will be present for the near future, I don't see those going away. And then who knows? Who knows what other things could come up? So with that, I've probably spent more time than I needed to, Dr. Nelson, going through some of these things, but I thought it would be good just to hit some of those topics and at least get some food for thought as these individuals move through their program and think about their administrative degrees in superintendency or finance administration. Lots of challenges, but as we need to remember, lots of opportunities as well. So, Dr. Nelson.
Thank you. I'm going to try to. You might hit that so we don't share the screen anymore. If you want to, and we can get both.
Stop sharing.
Yeah, or it says share.
I've always hated to not share with you, Dr. Nelson.
Well, all that does is open it up so we can see each other. So, well, thank you. I appreciate it. A couple of questions that I had as you were presenting that. You talked about not knowing what the valuation is, and depending on the county, sometimes your county assessor will be very cooperative and kind of letting you know where they think that percentage is going. I used to use that as kind of a basis. The valuations across the state fluctuate a little bit, but now we're kind of in a place where there's a certain standard of valuation that the state assessor's office follows. And there was a time when some counties where they deliberately assessed low values so they could get more state aid. I think those days are over. The other thing that we didn't talk about, we talked about the budget. How does a budget can be changed? How do you do that? What's the process?
Well, I would say to you that, of course, the biggest fear that we have as finance administrators, it's pretty, so what if you underspend a budget? And you've got to remember that there's really two sides to a budget. There's the revenue side, and then there's the expenditure side. Mm-hmm. And so those two budgets have to balance. So when you submit your original budget, those two will be balanced. Now, you know and I know that the revenue streams may change. They may be different in the year. You may not get what you think. So if you don't have the revenue to fund your expenditure budget, what do? Well, then you have to look to your reserves to cover that expenditure. You may have to borrow money to cover that expenditure, which creates an additional expense. So the underspending piece of it can happen, and you really don't have any filing issues other than the revenue side. Flip that over and look at the expenditure side. If you have a situation where you come to have additional expenditures, and it's happened in our district several times because of, for instance, you mentioned funds that are not necessarily a part of the general fund operation, but for the special grants fund. We had a situation where the year that we received the ERA funds, additional ERA funds, we had to do this. We're going to spend more money than we budgeted. You have to follow the same legal processes that you adopted the budget to amend a budget to be able to spend those additional dollars or to cover for additional unanticipated expenditures. Now, it's pretty tough to go to your public and your community to say that, because you won't, if you don't have the additional revenue, you can't go in and change your property tax rate to change that. Right. So if you have a situation where you have additional grant funding, that's one thing. But if you don't have a grant funding, but you incurred some additional expenditure that you don't have revenue to cover, where's that revenue going to come from? You can amend it to spend more money, but you're going to have to come up with the revenue from someplace to cover that additional expenditure. So it's exactly the same as adopting a budget. You just have to go through it and amend it. But the public scrutiny as to why and what are you doing that for would be significantly greater than, of course, the process, because it would have to be shorter and at the end of the year. So that would be the process.
Dr. Poole, you mentioned cash reserve. What's the purpose of cash reserve and what limitations are there?
Well, different size districts based on their budget will have different cash reserves and by class of district. Now, a cash reserve it almost becomes a finance philosophical piece. I've known finance administrators who simply say, we don't need to carry, and boards say we don't need to carry a finance reserve, a budget reserve, a cash reserve, because if we incur less revenue than we have in the bank, we'll simply borrow money and it becomes a cost of doing business. But you do incur additional expenditure. Now, can you borrow the money? Yes, you have to pay it back. Can you pay it back? Property tax revenues coming in very, very much fluctuate, whereas with state aid it's fairly even. So districts that have very little state aid but have a greater reliance on property tax will see that property tax revenues come in, it spends down, comes back in. So you have to have enough money in the bank. And I always said if I was a good finance administrator, at the 1st of March, I'd have a dollar in the bank because, or the 1st of April, because that's when our first half of property taxes come in. But the reality of it is, you don't have the money in your reserves because of those fluctuations. You're going to have to borrow money.
Right.
And so, what is that appropriate amount? And philosophically, prioritizing as the board, finance administrator, where do you want to be with that? And we have adopted in the Omaha district, we have a policy that we have to have in for general fund purposes, we have to have a minimum of 5%, a maximum of 15%. If we have less than 5% at the beginning of the year, we have to budget to get it up to 5%. Mm-hmm. And that means you're budgeting money for what? Put it in the bank, right. Not for the education of kids. Not for the education of kids. And we have the flip side of that. If it gets over 15%, we have to have a plan in place to spend it down to that 15% level so that it doesn't get too high. Because people go, why do you have so much money in the bank? And the fact of it is when they look at your budget, it's a year-end, year-beginning amount, and it isn't the operational level because that level will adjust throughout the fiscal year based on what revenues come in, what your expenditures are. And I'll tell you what, every month, you shall make payroll. So,
you'll hear about it.
That's one of the things that you'll discover very quickly as a superintendent or a finance administrator is you shall make payroll.
Well, I want to thank you for all the information you've given us. And I know that one of the things that you would emphasize, and I know I emphasize, is when you start doing that first budget, that find a mentor for one thing, and the other is the Department of Education is really there to help you. They're very helpful.
Yeah.
So don't be afraid to contact them.
And I tell you what, I would also encourage that people consider membership in the professional organizations that we have available in the state, that we have Council of School Administrators, the school business officials. There's great resources. Build those collegial relationships as you have in your graduate program. Know people, get to know people, contact people. They're the best resources that you can have. In fact, Dr. Nelson, didn't you contact me at least once when you were superintendent?
Yeah. Once I didn't get the answer. We're laughing because of the story, and actually in the executive administrator course that I teach, we have students research at school. Well, I took a superintendent's position, and when I got to looking at their books, it was a Class B school with $29,000 cash reserve and $5,000 in depreciation. And I called Dennis. I says, "Why didn't you tell me this?" He says, "You didn't ask."
and that's why students. He mentioned cash reserves because that's living history.
Yeah, that was the real deal, and I learned from that, and I want to pass that on to other students. So, well, again, Dennis, thank you very much, and really was a nice overview of funding in Nebraska and the finance system that we have in Nebraska, and we realize it's always changing. So I'm going to stop recording and say goodbye. Thank you very much.
Best regards to you as students and in your career pursuits.
Thank you.